Yeah, hello everybody. Here is again our channel, and you see I'm already speaking in a very slow mood at the beginning, so I hope that doesn't increase during our small one-way conversation this time. It's exercise case 18 now, so you see I give you a mass of exercises on value-added tax after the chapter with exports and imports because it's a very fundamental a topic, and value-added tax is one of the things which you need to know in practice on your own, and you can't always ask a tax advisor for it. So that's the reason why you have so many exercise cases after each chapter, just to give you the chance to practice dealing with the German tax acts. Well, after we have said this, let's go to the case. Bernd Baumann from Berlin, that's in Germany, orders chocolate from a Swiss producer in Zurich, and the contract says that the price is 10,000 plus the correct amount of VAT. Now the Swiss producer brings the chocolate with a truck of his own from Zurich to Berlin, so that when passing the border it is him who has to pay the importation VAT. Does the Swiss producer have to hand in a regular tax declaration and pay regular VAT for this transaction in Germany? That's the question which we have to solve and where we have to look on. So let us simply first find out what happens here. We have the Swiss producer, we have his customer, that's Baumann in Berlin, who is evidently an enterprise owner, because I don't know many people who order chocolate for 10,000 euro. So that can be reasonably assumed that Baumann is also an entrepreneur. The deal is about chocolate and the price is 10,000 plus VAT. Now, as this is a delivery, evidently we need the starting point and the point of destination. So where the movement of the good begins, Zurich in Switzerland, and ends, Berlin in Germany. Now we have everything which we need to assess this case correctly. So let's begin with taxability. We have to test 1 month number 1 USDG as always. We have the seller is an entrepreneur, paragraph 2, 1, sentence 1 and 3. That's the guy from Zurich. He acts evidently within his enterprise activities, because you know that paragraph 2, 1, sentence 2 says the enterprise comprises everything which happens in connection with the enterprise. So the main activity and the ancillary activities in selling such a massive chocolate is definitively not something private. Does he act for consideration? Yes, he demands a price. Is it a delivery? And there we can only say a yes. Under 3.1 USDG, the sale is a transfer of economic ownership, and here naturally even of legal ownership. And chocolate is a tangible good. Although if you touch it, you see, tangible is the things which you can touch. If you touch it, it's no longer a very hygienic matter. In the inland, that is simply determined by the place of delivery rules. So under the basic rule, it would be 3.6 sentence 1, the place would be Zurich. But you remember that in cases where goods come from the third countries into the inland, there is a special rule of paragraph 3.8 to be tested. That says if a good comes from a third territory into the inland, which is the case here, and the deliverer or his employee or somebody on his or her behalf pays the importation VAT, then the place of delivery for testing 1.1 number 1 is shifted fictitiously to the inland. That happens here. So the transaction has all 5 criteria of 1.1 number 1 fulfilled. It's an entrepreneur within the enterprise for consideration. It's a delivery and it is attributed to the inland. So it's taxable in Germany under German law. Is there a tax exemption? For this purpose, we have to test paragraph 4, and we find out there is no exemption in paragraph 4, so the affair is fully liable to tax. The next step would be the tax base, that is, as always here, the net amount. And the net amount is defined in the contract already as 10,000. There is no reason to believe that something goes wrong here. So 10,000 counts. We have the tax rate for chocolate, 7%. You know, many items, many things which are food are taxed under a reduced rate in German VAT law. So we can reasonably suspect that chocolate is 7%. However, we must be sure. If it's 7%, then it's 700 euro on 10,000 net. And you can check that. If the 7% is correct in 12.2 number 1, you have an entry which says 7% tax rate applies to all the goods which are listed in Annex or Supplement number 2 to the Umsatzsteuergesetz. And in number 30 of Supplement 2 to the Umsatzsteuergesetz, you find indeed chocolate and cacao and products produced from these materials. So it's 7%. The taxpayer is the entrepreneur, and as the entrepreneur is now here the Swiss seller, that means that the Swiss deliverer is the taxpayer. That also means that our Swiss taxpayer needs a German tax declaration and will have to apply for a German tax identification number and things like that. Let's go on. The arisal of the tax. So when the tax begins to exist, that is, as always, at the end of that preliminary declaration period. You remember that is for most enterprises the calendar month, during which the delivery happened, 13.1 number 1. Here we have no date given, so we can't give an answer in a more precise way. The invoice must follow the regular rules, and the regular rules are that the person who writes out the invoice must state his, her, or its tax registration number of Germany, must name the address of the customer, name the own address, and fulfill a list of formal requirements so that the invoice is correct and entitles the recipient to input tax refund claims if the recipient has such claims. So for this reason, our Swiss supplier will have to look for a German tax identification or registration number. Without that registration, the Swiss supplier is not even able to write an invoice which the customer would like to pay. Declaration duties, naturally, as the Swiss supplier has to pay German VAT, the Swiss supplier has to hand in a German tax declaration and make a payment to the German tax authorities. So it's rather a bureaucratic affair what happens here. Peculiarities, there are none. We have no indication that the invoice has been written in the wrong way, which would create additional problems. Nothing like that, so very simple. The input tax claims, yes. There is no input tax mentioned which would be relevant for the Swiss supplier. And the German customer Baumann has naturally an input tax refund claim under 15.1 number 1 if what can be assumed the chocolate has been bought for the purposes of his enterprise. Naturally, for making this refund claim, it is necessary that our Mr. Baumann has a correct invoice which was issued by the Swiss supplier, so that it's formally correct. Well, this was then already everything about that case, so it was indeed a simple case. I hope nevertheless that you could enjoy it a bit, and I look forward to see you again soon on the channel. Thanks and goodbye.